afternoon, everyone. Welcome to another Asia Global Institute event. Today, we're going to talk about digital trade. Global trade goes digital. I'm Hei Wai Tang, the director of the Institute, and we don't need a long introduction about what's going on in the world today. Every day you open up your phone and you realize there's some shocking news happening usually on the other side of the world. Global trade has gone through quite a lot of challenges. There are tariffs everywhere. The cost of trade has increased substantially, and therefore trade has been restructured. Supply chains have been restructured in a way to be aligned with friendshoring and nearshoring or whatever. And in this part of the world, some companies have been adopting also China plus one strategy. So the question is for Hong Kong, which has been and will continue to be an international financial center and international trade center, what should we do? So today, I'm going to let my friends and colleagues, and I would say they are the leading experts on digital trade in Hong Kong and Singapore, to talk about new opportunities for Hong Kong and how Hong Kong should be transformed into a new international trade center. Of course, we still remember 20 years ago when you drive up to the western part of Kowloon and you see the cargo port that is full of containers. Today, maybe we don't have as many containers as 20 years ago, but we should think about how our comparative advantages in trade can be leveraged to reconsolidate ourselves, perhaps not just as a cargo shipment center, but a trade financial and trade finance center. I'm not going to introduce each speaker one by one, but I want to introduce my boss, the chairman of the Asia Global Institute, who is also the founder of the Fung Global Institute, the predecessor of this institute. He has been a big supporter for anything related to trade in Hong Kong and in the region. And we're also very happy to partner with ICC, International Chamber of Commerce, and Pamela Ma, who is the executive director on DSI, Digital Standard Initiatives, have been promoting digital trade in the region, especially in Hong Kong. And some of you may have noticed that our own financial secretary, Paul Chan, has announced in the most recent budget, among many things, that the Hong Kong government is going to undertake some legal reforms, including introducing the so-called model law on electronic transferable records. I have no idea what it is, but Pam is going to spend 50 minutes to talk about that later, after our chairman, Victor Fung, going to give some opening remarks. And by the way, Victor was the first chairman of ICC 16 years ago, during the financial crisis, I think 08 and 09. First one from Asia, and so therefore, he has been chairman for many organizations, and he told me both ICC and AGI are very close to his heart. So therefore, he made his trip to here to talk to you, even though he probably has to run to another event in 20 minutes. Victor, your time.
Yeah. Good afternoon, everybody. It's really heartwarming to be here, I must say. This is actually a fairly emotional moment for me because not only am I very involved today with the Asia Global Institute, but I have actually been working very closely with the International Chamber of Commerce for many years. And as Hei Wei was saying, in 2008, I was actually the global chairman of ICC, based out of Paris, and went through some interesting times during the financial crisis. So to see that ICC and the AGI is working together today in a subject that is critical not just to Hong Kong, not just to the region, but to the world, and having it really introduced in a major way here, I think is a significant event. What I'd like to do is maybe just to say a few words to give you the context of today's meeting, and then I'll leave to the experts. Frankly, I don't think I can follow all the latest that Pamela is developing in the DSI and all the experts on trade finance and so on. But what I do want to say is the following. Digitalization has been an objective of global trade for decades. And up to this point, I think there are a lot of progress being made, but it's by no means pervasive. We're still dealing a lot with paper and so on. A lot of it is because of just the court recognizing, very simple, that contracts can be in digital form. And you don't have to, do something in digital form and then wait for a document to be flown in, that is signed. That sounds very simple, but it literally is a great lobbying effort by ICC in Hong Kong, by other organizations to really get that into the legislation. And I don't think much of that has been recognized. That's just one step to legalize transactions and contracts in digital form will be a big change, and we're now at the doorstep of that. But let me step back to even give a slightly bigger picture for Hong Kong. Just following on what Harry just said, Hong Kong actually, if you think about the economy, is a two-horse carriage. What are the two horses? One obviously is our IFC, accounts for about 22% of our GDP, and provides, I think, in the mid-teens in terms of employment, high-level employment. But don't forget the other real economy part of Hong Kong, which is the other horse in the carriage, which is also 22% of the Hong Kong's economy, which includes, of course, what we call the control tower aspect of managing the movement of production around the world. It includes the logistics and the flow of goods through Hong Kong. And it provides actually twice as much employment actually as the IFC, but also not only at the high part, which is a lot of that, but the medium and lower end employment, which I think is so crucial for the overemployment picture of the whole economy here. So if you look at those two pieces and think of them together, it's almost half of Hong Kong's economy. I submit that that is the key to our future. How do we actually think about those two pieces, tying them together and making them synergistic? And I cannot think of many cities in the world. I don't think I can think of, I don't know what I would say, that actually could excel in both those. IFC and the real economy in terms of the management of global supply chains, and in one place. And if we can tie that together, Hong Kong's future competitiveness and positioning is right there. So I think this is what this is all about. And the key to cracking that, I think, has been the digitalization of trade. How so? If you look at the overlap of these two economies, the supply chain side, the IFC side, what is the overlap? It's something called trade finance. Now, I'm not saying trade finance is the only thing, but it's a very crucial linkage. And if you think about the over financing eventually of medium and smaller enterprises going abroad from China, for example, they need a lot of different types of financing, but I would submit the easiest entry point would be in trade finance. Because we all know trade finance, has the opportunity of actually allowing even smaller companies that don't have a strong balance sheet, if they can create good products and sell it to good buyers, there's always the possibility of buying that receivable and actually riding on the credit of Walmart or whatever the buyer is, as well as the credit of the. So really at the heart of this discussion is how do we link the two together? And if you go deeper, the two things and the future of trade finance, I think, has a very significant role to play. Now, I'm not downplaying all the other parts that we do, and I know a lot of people not necessarily connected with trade finance in IFC does, but that is the connectivity. And I would submit that if you look globally in the world, there's a huge gap in the trade finance. I remember I ran a major study in 2008 at the time of the financial crisis. In fact, it was at the time of the G20 in London, if you all remember that. The world was in crisis. Trade was actually literally coming to a stop because, well, I won't go into details, because the way Basel III had been implemented and how trade finance receivables were basically misclassified. It was put into the same risk class as derivatives, believe it or not. Anyway, cut a long story short, we ran a global study within the IFC global network, the ICC global network, and the trade finance gap at that time was identified as $1.8 trillion. 2 years ago, for those of you who may be more keeping up with this area, the ADB, the Asian Development Bank, did an update on that study, and the trade finance gap has now grown to 2.5 trillion US dollars, and it's growing. So, what is the consequence of that? It's very simple. Trade in the world historically has always been growing at twice the rate of GDP growth for the world. It has now slowed down. It's still growing. It's still growing faster than GDP, but I don't know the latest numbers. Probably like now, instead of 2 times the growth rate, it's down to about 1.5 times the growth rate. You know, I need maybe 1.6. I need an update, but actually slow down. And if this continues and increase of trade begins to slow down, I think it will be extremely detrimental for the world economy, and especially for the developing economies, which need this sort of trade to bootstrap themselves, you know, really up the economic ladder. So we're looking at a very, very serious global issue. And also for Hong Kong, it is a very important part of our future competitiveness to get this 2-horse carriage tied together, working in the same direction. And that is not the end all, but that's definitely the penetration point. So locally, it's important. Globally, I think it's also crucial for the longer term. That to me sets the stage for today's meeting. And from the little I know about trade finance, and I know there are many experts here, it critically depends on now our ability to actually think of banking from a balance sheet lending basis to a transaction lending. You know what I mean? Instead of looking at paper on how your balance sheet looks and all the ratios, I want to make sure that you have a transaction, you produce the product, you ship the product, and you have a trade receivable. And I finance, even if your balance sheet is weaker than normal, I can finance that particular transaction. So the shift mentally from balance sheet lending, which is a traditional lending, and I used to be a banker myself, I don't want to criticize my whole industry. Sometimes you never go to the factory, you never see the product, you're shuffling paper around, right? Maybe you make one visit to the client's office. But what I'm talking about is changing that whole mindset to financing transactions day in and day out. Think of it. So it's a complete mind shift for the industry. Now, how do you achieve that? It's this. Without digitalization, there's no hope you can do transaction banking. Now with digitalization, we have the chance to do transaction banking. And if we combine that with the legalization of the documents in the courts, I think we're off and running. So we can make that whole transaction from balance sheet lending to transaction lending because we have the digitalization and these things like what Pamela is doing at the ICC and the DSI. I think we have a hope of really creating a new force in trade finance. And my hope is Hong Kong becomes the center for trade finance in the region and maybe the world. We certainly have those qualifications to do that. Now, can we capture that opportunity? And I'm happy to hear that the FS and the government is now moving behind this initiative. And I think today will be, in a sense, the opening salvo. We want the industry to be aware that we're ready, that is a huge future for Hong Kong and the world. So I think that is the perspective I want to give to the very much expert talks that I'm looking forward to hearing. Thank you very much.
Okay, try, okay, 3, 2, 1. Okay, one more, 3, 2, 1. Okay, thank you.
Thank you.
Okay, thanks, Victor, for that, for the background on what we're going to be talking about today. So I'm going to take about like 10 or 15 minutes to basically give you the basics of digital trade and what it's going to mean for Hong Kong, with a focus on the MLETR, the Model Law on Electronic Transferable Records, which was what the Financial Secretary quoted in his budget address. So I'm calling this an explainer because I hope when you leave today, you'll actually kind of know what's going on about this and why it's important, because it sort of appeared in the policy, in the budget address as somewhat from left field. And so just trying to make sure we all have the right backing. Okay, so I actually was working for Victor on supply chain sustainability, and it involved digitalization. And basically the context is that every time I went to a factory to try to get them to digitalize as the way to achieve sustainability and higher productivity and so on, they never had the right tools, right? They didn't know the standards. They didn't have any access to financing. Their equipment was all wrong. And none of these problems could actually be solved by themselves. So it was a factory to factory problem, and basically you can just go to 100 factories and you can continue this. Unless you change the structure, the system, these factories will not actually be able to achieve digitalization. So I then went over to the ICC Digital Standards Initiative 2.5 years ago, and the purpose of ICC DSI is to actually solve the structural problems which are preventing trade from being inclusive, digitalized, and so on. So these organizations on the bottom of the chart are my board. It's Singapore government, which invested in DSI, the Asian Development Bank, ICC, World Trade Organization, and World Customs Organization. We aim to do 4 things, basically. 1, solve the standards fragmentation, right? That digital standards are not well known, that there are many digital standards for one single document, and that data, and because the standards are not aligned, data cannot flow freely up and down the supply chain. Our vision is generate a piece of data once and have that secured, verified, tagged piece of data shared, which eliminates the need for checking and cutting and pasting and so on. So that's standards on trust. We need to agree, if we're moving from documents to data, we have to agree on the conditions for sharing that data, for protecting it, for systems which handle data, and so on. So it's a governance framework for how we treat data in the supply chain. The third is legal. Everyone, every country should have the same legal approach to digital trade. Meaning, and that's what the Model Law on Electronic Transferable Records does. It's a framework so that everyone can actually approach digital trade in the same way, and so that companies, when they trade from country to country to country, don't have to adapt to a new legal framework every single time. So harmonized standards, harmonized approach to digital trust, and harmonized approach to law and what is required regulatorily. And these are actually the same purposes of the WTO and World Customs Authorities, is that the trade system should actually be harmonized globally so that we can actually have a faster flow of goods, and so that we don't have to actually, change the good, write new paperwork, create new data every time the good crosses borders. And for any of you who work in global supply chains, it is rare that a product will actually come from one country. Most are crossing borders many, many times. And so we want a harmonized framework for all of that every time a supply chain is run. The last is capacity, is that you have very varying levels of digital capability worldwide, just because countries are at different starting points. And it doesn't always match to their level of development. I mean, China is way ahead in terms of digitalization, digital payments, and even digital trade. And yet China, the GDP per capita is still in middle income levels. And I deal with Europe a lot. The systems there, sometimes they're pretty archaic because they started in the 1990s and year 2000 where the whole computing system was different. So we need to build capacity in different ways. Okay, so what is the Model Law on Electronic Transferable Records? This is, you should get to know this organization, United Nations Commission on International Trade Law, UNCITRAL. It is part of the UN, and its sole job is to create a harmonized legal framework for international trade. So they do model laws, which are then aligned and adapted to by different countries. UNCITRAL is based in Vienna, and they have created a number of model laws which facilitate electronic commerce, the flow of goods, shipping, road transport, multimodal transport. But they are based, and the way they develop it, they don't like sit in their building in Vienna and just dream these up. The whole process of model law development is very consultative. Every country has the ability to input. They get a lot of input from industry, so it's actually fit for how the world works. And they're constantly developing new adaptations. And MLETR was basically finalized in 2017, and it applies to 7 key trade documents, including 3 of the most important ones: Bill of Lading, Promissory Note, and Bill of Exchange. Now, why these 7 need their own law? It's because these 7 are documents of title, meaning that possession of the document actually grants legal rights. It's just like a check, right? A check is kind of like a document of title because if you have the check, cashier's check, the money is yours, right? If you pass over the check to someone else, there's no copy of it. There's only an original, and you've just passed on that amount of money. So bill of lading in shipping, if you hold the bill of lading, you own the cargo. So that's why these kind of documents of title, because they connote a legal right to kind of performance, they need special conditions to effect their transfer digitally. Okay, so that we can preserve originality, we are technology neutral, we transfer the exclusivity, meaning that only one person can control it at any given time, and that there's only one of them, right? If you have a copy of a bill of lading, it really doesn't mean anything other than that it's a copy, but it has no performance embedded in it. So that's why, and the thing is, countries, I'll get to that in a second. Actually, the Model Law on Electronic Transferable Records is one in a series of trade policy moves that have been arising since year 2000, since the advent of digitalization. So the UNCITRAL Model Law on Electronic Commerce, which pertains to the digitalization of documents like invoices, purchase order, packing list, and so on. It basically, this says, if you have a document which has information which is in digital format, you cannot reject that simply because it's electronic, right? So you don't have to actually have the paper printout. So actually Hong Kong adopted that. It was published 1996. Hong Kong adopted that in year 2000. We have the Electronic Transactions Ordinance, which is actually the basis for what you have to amend in order to adopt MLETR. So it's very simple, and they're built on the same framework. MLETR is based on MLEC. It's just an extension of it with some new conditions. The WTO Trade Facilitation Agreement, which was signed in 2017, and Victor was actually heavily involved in that, that is the framework for harmonizing rules at the border, right? So the customs procedures that you undergo at every country, they're basically harmonized. And you can use same kinds of declarations regardless of which country it is. So actually Hong Kong was the first economy to ratify the TFA. And we did that in 2017, 2014, when it was the year after it was decided in 2013. And then, of course, they had to wait for a couple other countries to ratify it, and it finally went into force in 2017. So actually, trade facilitation agreement is the advent of single window. So why do we have a single window? Single window basically consolidates all your submissions to different parts of government in one single window. So it's a huge simplification and efficiency driver for anyone who trades through Hong Kong, because it means that you don't have to submit the same data to like finance and customs and different parts of the government. It's a one-stop shop. So Hong Kong's trade single window first launched in 2018, the year after the TFA, right? So Hong Kong has always been quite efficient at adopting global rules concerning trade, facilitation, harmonization, and digitalization. And Hong Kong was one of the original 71 countries which is launched the WTO e-commerce joint statement initiative. And this is the WTO's effort to harmonize and align rules concerning electronic commerce. So stuff like recognition of the electronic signature and transaction, recognition of the right to free flow of data across borders, prevention of imposing tariff on digital services which cross borders. These are all in the WTO e-commerce JSI, and Hong Kong has been a very, very active participant in this. So, of course, the WTO e-commerce JSI is not yet in effect because it has to go through the WTO's plurilateral process, which requires the agreement of all 160 members. So it's a while coming, but basically the rules concerning e-commerce, they're already in play. So on MLETR, Hong Kong, for me, Hong Kong is a bit late to commit because we've got 2/3 of the global economy already committed or aligned, including 4 of the G7, US, UK, France, and Germany, already done. And in the committed category, so it's when the government makes a public commitment to align, that's when we put it into the committed category. And the map is that the darker your shade, the more aligned you are. So you see that China is actually pretty dark. So China has committed to this internally in end of year 2022. That's when we started working with China to train all of their officials in the Ministry of Commerce. So China is an early committed, and they actually have approved MLETR for 2 free trade zones in Shanghai and Beijing. So they're already like charging ahead with pilots and different kinds of ways to encourage all their enterprises to take digitalization as a future builder of competitiveness. And also this year, actually Thailand should pass legislation, Malaysia, Japan, and so on, Australia. So basically, there's a lot of countries in the world, both developed and developing, who are already on board with this. And so Hong Kong, we have always been ahead of the game. Now is the time we need to actually get back into that position with this. And okay, so why does it take 2 years? So when we go through the MLETR alignment process with governments, we're working with a lot of governments worldwide, and we say, okay, very complex process, going to take you 1 or 2 years. Why? Because it's both finance and trade. Finance and trade, because promissory note, bill of exchange is finance, and then bill of lading is trade. So you basically need to reach out to Ministry of Finance, central bank, because it concerns digital payments as well, and customs and port and trade policy. And so for governments, this is like across the whole government. And it's especially difficult if the government is actually highly siloed. Okay, so we need to convene working group. It's not just like you need to change the law, okay, or write an amendment. You need to actually get engagement from those frontline officials, which is why China has been training their officials for so many years. And then actually the theory our theory is that you can't just change the law and expect business to get with it. You have to change the law and engage business simultaneously, because for even a business, digital transformation is really hard work. And the panel in a few minutes will start to describe why. It's because it's a process. You need to educate people, you need to rethink how you work, you need to upgrade. All of these things which make digital transformation difficult, they need to be done. It takes time, and you can't just do it overnight. So, change the law. So it's great, we're going to change the law or amend the law, and we need an effort to engage businesses to convince them of the benefits. And actually the benefits are pretty real. It's like save time, save money, get more traceability, and get certainty over your data. And in the age of AI, everything, you need data for everything. You will get the presentation afterwards. Basically, the theme of this slide is that China has been really, really active. And so why are a lot of the committed countries in Asia, right, in Thailand, Malaysia, Japan, Australia, even India is modernizing its payment system. We're starting initiative in Bangladesh, and then also Latin America, Peru, Colombia, Chile. Why? They are all trading with China, right? Number one trading partner. So where China goes, the rest of the world also need to go if you're trading with China. Because digital only works if it's two sides, right? If you're digital and your trading partner is not, there's no point, right? Because at some point you have to print everything out. So you need the whole chain to be digital, and China is involved in so many chains, and so China just, they get it. And I'm sure that by next year, China will actually have that law on the books. So what else do you need to digitalize trade in Hong Kong? Going back to standards, trust, legal, and capacity, the first is standards. So DSI is working through the standards alignment issue, right? 36 key trade documents. We're finding a way to actually interoperate those documents. It's not document to document, but rather in core data. Out of 36 key trade documents, we've identified 189 data elements which need to be shared. If it's not in those 189, basically you're talking about a bilateral transaction, and there's less impetus, less mandate for the data to be standardized. But for data that needs to be shared between multiple parties on the supply chain, we absolutely want that data term to be standardized. So this is a framework for thinking about how we move from documents to data in a way where we can use any platform and be able to plug and play our data into another platform. That is the key, because we all won't be using one platform. Everybody's going to use whatever platform they want, but the connectivity will be in data. All right, so this is the data hierarchy. You see there's a total 700 to 800 pieces of data in all 36 documents. There's 189 which are core, and then there's 21 pieces of data which are shared across 10 or more documents, which means probably 10 to 15 to 20 parties. And if any of these data is wrong or unstandardized, the data sharing possibility, it doesn't exist anymore. So what else could we use this data framework for? So we've developed a bank-defined data set, which goes back to the digitalization of trade finance, is that if you have a trove of secure data from the supply chain, you can actually ingest it within banks and drive efficiencies in the trade finance process. So it'll be cheaper, faster, easier for banks to lend to more parties. Okay, and it's really important. That's really important for closing the trade finance gap, because the main reason that banks don't want to lend to SMEs is because they don't have enough evidence about their credit worthiness. They can't make the KYC, know your customer process, efficient enough. There's too much documentary work. So let's get the secure data from the supply chain and use that to boost trade finance worldwide. The last one about digital trust, how do you know the platform that you're using to transfer electronic transferable records is up to the task, right? Do you rely on the claim of the platform? No, you actually have to rely on an externally driven certification. So we've created that. It's aligned to the MLETR. It's basically a test of reliability because the MLETR says that ETRs can be transferred on a reliable system. And they've defined this reliability according to certain characteristics, which I mentioned before, that there's only one of them, only one person can possess it, all the changes are traced and recorded. So we developed a test for platforms to prove that they are reliable. And this is, actually we partnered with the Digital Governance Council in Canada, which is an expert on verification systems in IT. And so they're part of Standards Canada. So the thing is, DSI doesn't have all the answers. We're a very small team. But we work a lot with the industry and through the industry advisory board, of which Bertrand and Venkat are members, and as well with a lot of partner organizations worldwide to get the knowledge where it needs to be and create tools and frameworks that are immediately applicable by business so that we can all digitalize faster and more securely and in a more smoother, interoperable fashion. So that's your digital trade explainer. If you want more, you can take our course. This is also online. It's 5 hours. This is also not a kind of academic type course. It's a professional credential, and actually the lecturers in this course, they're all practitioners, like from WTO, like from WCO, like from all the industry associations. So this is really something, if you want your staff to actually know what's in this presentation, then please take the course. So that's it for the presentation. We're going to go right into the panel where business people are going to tell you about how great digital trade is. Come up. Let me just introduce our panel. So Wilkie Wong, who is the CFO of Esquel, a major Hong Kong. Come up. Bertrand Chen, who is running the Global Shipping Business Network. You used to work for Hutchison Ports on blockchain, so any questions about blockchain, please ask Bertrand. Venkat, who runs a part of trade finance for HSBC. He's based in Hong Kong. Any questions about money, ask Venkat. And Hei Wai, who's going to tell us about regional trade as well. Okay, so you sit there, I'll sit here.
You're the moderator, right?
Yeah. Okay, so the way we're going to run this panel is very simple. I'm going to ask one question each to them and then throw it open to the floor. Okay, so if you have any questions, please start getting ready. First question to Wilkie. So Hong Kong firms have been forerunners in advancing new ways to orchestrate supply chains, also which have been demonstrated by Esquel. And today, Hong Kong is the 10th largest merchandise trading economy in the world. How should we be thinking about future advantage for Hong Kong orchestrated supply chains? And what are the keys to retaining that advantage?
Thank you, Pamela. Well, very happy to be here, and I represent a company that's based in Hong Kong. We're in the textile and apparel trade. So as Hei Wei mentioned, I mean nowadays, when you go to sleep, you get a news alert. And when you wake up, you get a different news alert. So last night, it's if you use Venezuela oil, you could be subjected to a 25% additional tariff. So that's the kind of news that we see today. So for companies in Hong Kong in particular, I think we're sandwiched in the middle between the US and China. So historically, our business, we produce in the East, sell to the West. But I think this model is being severely disrupted. So from our perspective, anything that can make trade easier is going to be favorable to us. So I think that's first and foremost, how do we make trade easy? And secondly, because of the nature of the Hong Kong the companies in Hong Kong are wired. We don't just produce and sell here in Hong Kong. We have production facilities in other parts of the world. So whether it is you talk about China, Vietnam, Southeast Asia, or where, and then you sell to other parts of the world, not necessarily through Hong Kong anymore. So the question is, how can we, but at the same time, Hong Kong has a very unique advantage in terms of the services that we can get, whether it's through HSBC, like the banks, the insurance providers. So a lot of these service providers in Hong Kong, well, that's our advantage. But when the trade is no longer necessarily going through Hong Kong, how can companies like us in Hong Kong, where the manufacturing location as well as the customer need not be in Hong Kong, but we can still take advantage of the services, the excellent services that we can get from Hong Kong. So that's what we need to think about. So going back to today's theme, digitalization is definitely, it's a prerequisite for a lot of these things to happen. Previously, we rely on goods coming into Hong Kong and we benefit from all the setup. And digitalization can help us go beyond boundaries and be able to facilitate the trade that could be going from China to, let's say, Thailand, without having to go to Hong Kong, but still be able to take advantage of the services that Hong Kong can offer. So that's the kind of thing that we want to see more of.
Okay, just to build on that, so you actually see that it's possible for Hong Kong to retain an advantage in an era where everyone can basically go direct to China or wherever else, that we can still play a role in intermediating those supply chains.
That's right. So I think it's important for Hong Kong to play a role such that we adhere to the global standard, so that, and the global standard, and then we'll also, as a facilitator and also as an advocate, to sign up our key trading partners, getting them on board on that standard, so that the trade for companies in Hong Kong, where they have operations, whether it is on the manufacturing side or on the selling side, then they can still take advantage of that standard and be able to have a smooth trade and also to have all these services to back up that trade.
Okay, thank you. So one of the services is obviously trade finance, and tell us, I guess, Ben, tell us what digitalization of trade means for Hong Kong's ability to intermediate global finance and retain its advantage as an international financial center, as mentioned by Victor.
Thanks, Pamela, for having me here. This is a great question, and I think we've always discussed this bit of it, especially with respect to Hong Kong. And if I have to recognize, there are three things that we need to consider. One, Hong Kong's current position, and I think Victor mentioned about how we're still the leading regional hub today, and maybe we could be in the future. So it's important to recognize why Hong Kong is at that position, because that's our starting point, whether it's the legal system, the banking system, the kind of employees or the resources that Hong Kong has, and that's already placed Hong Kong at a good position. Companies are here, whether they're from China, wanting to go abroad, or the other way around, big MNC names from the West having their big offices here, and these are regional hubs, and that's for a reason. So I think it's important to recognize that. The second part, and I think coming to your question on digitization, what can it do? And I'm just sharing a few very practical things that digitization does. I think one of the basic things that when we speak to our clients, and with the disruption in supply chain, we keep asking our clients, what are they doing? What are they planning for? Because having offices, financing, etc. is one area of activity, whereas having the factory production is another. So these are quite separated. And the feedback that we do get is ease of doing business is at the top of priority, whether it's administrative, whether it's taxes. So that's a layer, and I think beyond trade finance getting digitization in Hong Kong, that's going to hold a key part. The second part, closer to heart, trade. And again, I think Pamela explained it beautifully on what digitization does, but if I have to put it in a very, very simple manner, today, when trade is done in a paper form, and if you're a buyer or a seller, you could take anywhere between 10 to 15 days, depending on where you ship, how the documents move, where the bank is, for your money to realize. So effectively, if you think about it, your capacity to do business, which is always dependent on the money you have, it's getting clogged with the current frame of things. Now, if I were to cut this down to 2 to 3 days or even a day, which is what digitization could potentially do for all of us or our clients, that turnover could double. So effectively today, if you're dealing in 20 shipments a year, that could become 24, and that's reality, and that's what our clients are likely to see. So that's the second big benefit of being able to drive the velocity of trade or the business that you do. And the third one again is closer to, I think, Victor, you beautifully mentioned about the point of SME lending, right? And I think that's what data is going to enable. We do, as a bank, we do balance sheet lending, and that's our standard model. We look at network, we look at collateral. Today we started learning to use some of this data, not in the digitization form, but we have parallel working groups or POCs that we've done, say for an e-commerce. So effectively, if I know the customer trades, gets paid well for the last 12 months, that gives me the confidence to lend to him. I don't need to really worry about the balance sheet being, the net worth being low, but I could look at it and say, look, he's doing a great business. He's got great buyers who pay them on time. And if I were to, in a way, figure out how to make sure that money comes to us, I should be able to lend it. So that's SME lending or inclusive lending. So going back, ease of doing business, being able to do more trade, and last but not the least, the inclusivity. And that opens plethora of opportunities. And Hong Kong, as I see, it could, and again, speaking of opportunities, it's B2C e-commerce business is opening up, and we're seeing opportunities. We're trying to build models, whether it's customers in Hong Kong, whether it's customers in China, they are going through this. RMB is a very important bit that China, especially the offshore RMB, which Hong Kong is the biggest base, and that enables business. That can be enabled. Again, digitization of payments comes into play, along with trade digitization. I think last but not the least, we do see the inane model of Chinese companies, or as I think Wilkie mentioned, they're all going out with their ODIs to ASEAN, etc. I think that again, they need a hub from where they go in. So all put together, I think Hong Kong's got a strong base to trigger from. Digitization, and I know you mentioned it's kind of relatively, 8 or 9 big countries have already been out there with the laws, but today Hong Kong has the opportunity to now take digitization to that next level and leverage this opportunity to move it to be a global or a regional hub.
Thank you, Venkat. You mentioned ASEAN, and that's one of the new focuses of the Hong Kong government. And given that ASEAN's biggest trading partner is China, Hong Kong is ideally positioned. I think, Victor, you called this an hourglass, that we've got China in the north, ASEAN in the south, and actually intermediated through Hong Kong. So that's the opportunity. Bertrand, so, speaking of China, you actually work quite closely with China given your partnership with Costco. Can you tell us about what is China doing right on digitalization, and where is China going? And also if China has areas to improve.
Sure. Thank you for having me here again. So first off, my name is Bertrand. I work for GSBN, a global shipping business network. It's a blockchain consortium with a major shipping line and terminal operator. So some of members are Costco, Hapag-Lloyd, CMA, ONE, basically all the big name shipping line you can think of are our members. We also have terminal operator, Hutchison Port, SIPG, QDP. So we are, I would say, a slice of the shipping industry, if you will. And the EBL is the main product that's really scaling up on GSBN today. And mostly its promoters are Costco, I would say, and MSC, two large shipping are pushing for those. And what we see now is, although UK or Singapore was the first one to adopt ETDA, and the UK did ETDA, digitalization in those countries actually hasn't really taken off. The country actually where you see the most transactional EBL is actually in China. So there's a statistic for you. Last year, globally, the adoption of EBL is 5% globally. But in China, some of the larger shipping lines, 20%. So it's 4 times the global average, right? And why is that? Is because, as I think Pamela mentioned many times, there's a really big focus right now on digitalization in China. Plus, I would say the entity in China are quite comfortable with blockchain-based structure, contrary to a lot of people outside China who are quite skeptical of blockchain, right, for various reasons. So I think that's kind of actually the reason why EBL is really taking off in China. So then going back to what does that mean for potentially Hong Kong? That's the reason we're here today, right? And I'd like to echo some of the point I think Dr. Fung mentioned earlier, which I agree 100%. The purpose of digital trade and for Hong Kong to adopt MLETR is not to focus on what you can do in the physical world here, meaning not what's happening in Kwaichong, right? Not moving the boxes. Because if you just look at what's moving the boxes, you constrain the physical space. There's only that many boxes you can move, how efficient you are. However, once you move to digitization, the type of trade you can touch is much broader, right? It's not just limited to this area of space. If you look at some of the largest cities who used to be big ports, then who become much bigger, such as New York, London, their scope of work is much bigger than the local area. And what happened is essentially all the extra service you can provide to them beyond shipping, right? And that has to do with logistics, enabling companies to do trade finance, but not only trade finance, these days I think compliance, reporting, things we do with decarbonization, all those which actually deal with data, touching this kind of sharing, it becomes very, very important. So that's one reason I think Hong Kong actually has quite a big chance to succeed, because Hong Kong is effectively the hub that connects China to the rest of the world. A lot of the business do not necessarily want to exchange data directly to China. They will go through Hong Kong. So that's one aspect. The second aspect, which is even more interesting, and that has to do with the product we're working on, the electronic bill of lading, is if you think about EBL, what's characterized it's you can exchange title digitally, which means the buyer and seller can click a button, so now suddenly this good is yours. It's not mine anymore, it's yours. The natural complement for this product is a payment product where you click a button and money is yours in your bank account, it's mine, right? And what's interesting is these two areas has been digitizing at different speed. So the payment side, I think from 1973, the birth of SWIFT, has undergo growth, right, and digitization. But today, actually, payment is pretty broken, right? Because if you want to send a cross-border payment, you take many days because of the corresponding bank system that you're forced to because of the US dollar. Now, what I think is happening in a very short term, and we'll see that within the end this year, probably early next year, and 2026 definitely we'll see that, is the genesis of stablecoin, right? Which is a very hot topic right now. So the US government and the Trump administration is pushing for USD stablecoin. In the Middle East, in Dubai, I see people pushing for the AED, which is petrodollar stablecoin. Here, I think it's logical to push for EHKD, which is really backed by US dollar also. So you have three US dollar complex that you can use for trade. And what's a normal complement to that is electronic bill of lading. So you can have a completely new user experience where you press the button, the money goes, and you receive the title. That doesn't exist today. Right? It's never been done before. And that goes to the point you're making earlier, Dr. Fung, about transactional banking, right? So this transaction can be financed. It can be paid this way. It can be financed specifically the risk. So it's completely a new paradigm how to do things. And I think that Hong Kong has advantage, not because of the city, the people or the location, but mostly because it's a bet on China. As long as China trade is big, this is location where that will happen. I would disagree slightly what you said in terms of Hong Kong is the only place you can do that. I think it's probably only two cities in the world I think can do that today. One is Dubai, the other one is Hong Kong. So those are the two cities I think really have the logistic component and the trade finance component. That's I think everywhere else, because I just came back from US and Europe, I think everywhere else is fighting a different game right now. They're looking at different things. US is looking inwards, Europe has to worry with much more other things. But two locations you can do this today is probably Hong Kong and Dubai.
Can you elaborate on your mention of Dubai? Why, first of all, is there room for both? I mean, obviously, that's one question. And secondly, what does Dubai have that, Hong Kong doesn't have?
I think there's definitely room for both, right? I think you will have to be both because you can't just have one pole for payment and transfer. Some part of the world would not trade with China directly, right? I think what Dubai has is basically, if you look at the movie Casablanca, is where today you have Americans, Russians, Indian, Pakistanis, everybody can do business. And that's something that's quite unique today. The second thing I think is you have a lot of influx of immigrants from Europe, qualified people who are going there. So there's attraction to talent that they have that I don't see that anywhere else. Honestly, when I went to Dubai, look at it, I was like, wow, it feels like Shenzhen or Shanghai 20 years ago. How fast it's growing, how fast it's moving. So definitely, I think Dubai has a leg up, but what they don't have is the beta in China. That's firmly Hong Kong. But I think if Dubai and Hong Kong can do trade together, there's a lot of things you can do. Because if I'm an American business, I can do business in Dubai. Maybe more careful about Hong Kong. But Hong Kong and Dubai can do business.
Okay, thank you. And just to also note, the HKMA and FSDC are now on a big Gulf and Middle East push. So, yeah, we'll see where that goes. Super interesting. By the way, in Dubai, one other thing that they have that Hong Kong doesn't have is that there's no tax. There's no income tax. So, not that I'm suggesting that for Hong Kong. KY, coming to you. Let's say Hong Kong digitalizes. What does it mean for our, our trade profile, our regional trade flows?
I'm not an expert on this, but I studied trade for 25 years. So I can tell you trade has been restructured, as I said at the very beginning. If you look at Chinese export to the US, used to be 1/10 going through the so-called connector economies, Hong Kong included. And now about a quarter of China's export to the US went through some other economies, such as Vietnam and Mexico. So we are not benefiting from some of this sort of rerouted trade because we are part of China, and therefore US is not having us to be the sort of intermediator or the middleman anymore. So therefore we really have to think about non-merchandise trade, and what I've been studying at Asia Global Institute is service trade, especially digitally delivered service trade. So just give you some numbers, right? Victor was trying to think about how fast merchandise trade has been growing as compared to GDP. It's actually growing slower than GDP since 2010. Partly because you left ICC in 2010, and therefore trade started to slow down quite a bit. So from 2010 to 2022, merchandise trade has been growing at around 1.8% per year, as compared to close to 3% GDP growth on average around the world. But service trade has been growing much faster, actually higher than 3% per year. And if you look at digitally delivered service trade, from 2005 to today, around 20 years, it has increased by 300%. So therefore, for Hong Kong to adopt, some of the, digital standards that you were discussing, and for us to be a digital trade hub, together with, trade finance, etc., we have a lot of new opportunities, right? Again, I kept talking to government officials, and some of them are here today. We should abandon the idea that, how to increase the efficiency in Kwai Chung and all the cargo shipment ports, because the containers are not going to come back, right? The cost of handling a container in Hong Kong is twice of Shanghai's cost and almost 4 times of Shenzhen's cost. So we should really think about our cost advantage, right? Our cost advantage is everything related to our professional services and also the infrastructure and the sort of regulation over finance, over data, and also our position as a RMB offshore trading hub. So if we can combine all these things and we think about what trade means to us, then we have the way to rebuild Hong Kong as an international trade center. Again, we should not be a container center. We should be a international trade, and maybe we should relabel it as international trade service center, and that would be the future of Hong Kong.
Okay, and that actually goes back to what the WTO e-commerce JSI is all about, is that they've seen that digital services are growing very fast worldwide, and they see that it creates jobs and it creates inclusive growth. And so that's why they've started the e-commerce JSI, is to enable digital services to actually continue to grow very strongly. So it's not that, a lot of times when I was in working in business, I thought that what the UN and international organizations did somehow was kind of separate from what actually happens on the ground. But these things are rooted in reality. So even though like the WTO e-commerce JSI is not going to change your life and what you do tomorrow, it's something that you could just gotta park, because sooner or later the conditions that are embedded in that are going to come to affect how you do your business and what you need to be rethinking. And that's the same with MLETR. MLETR is not going to make you do something different tomorrow, but park it, and when the opportunity comes, you'll see that it actually has impact. So I'd like to now invite Keith Brandt, who is Vice Chair of ICC HK, which is the local branch of ICC, to make some closing remarks.
Thank you, Pamela. I will be very short. We are close to the top of the hour. First of all, a thanks to the Asia Global Institute to invite me to lead the closing remarks for this afternoon's event. So that brings to a close our forum, Global Trade Goes Digital, Achieving the Transformation in Hong Kong. As Pamela said, I'm the Vice Chairman of ICC Hong Kong. I'm also, for my sins, I'm the Managing Partner of Dentons Hong Kong, so I'm a lawyer and I apologise for it. So I'd like to offer, first of all, the traditional, and I think we'd all agree, traditional, very well-deserved a vote of thanks to the team of panellists, starting with Victor himself. Thank you, Victor, for your inspiring remarks at the outset, and Wilkie, Bertrand, Iwei, Venkat, and Pamela, a terrific job. Well done. Thank you for bringing to life the discussion today. I do think that some of us will be rushing to join the certificate in digital trade that Pamela was mentioning in her opening presentation. Clearly there's a lot to be learned from taking that course. So I'll be one of them that's signing up for that. We've heard about advantage, we've heard about relevance, we've also heard about rebuilding. These are descriptions for Hong Kong, and I think we'd all agree that highly relevant at this moment in time for Hong Kong. I think it's extremely encouraging to see the government's readiness to embrace the UNCTRA model law on Electronic Transferable Records, MLETR, reaffirming Hong Kong's commitment to digital innovation. And as we've heard from today's discussion, and it's been demonstrated, digitalization is no longer an option, but it is an absolute imperative. So in closing, I'd just like to pick up three strategic opportunities for Hong Kong as it continues along the path of digital transformation. Firstly, Hong Kong's proactive adoption of electronic trade documentation in line with MLETR certainly fortifies its leadership as an international trade hub, particularly within the Greater Bay Area and across Asia. On all fours with ICC's own mission to promote open international trade and investment and help businesses meet the challenges and opportunities of globalization, the Financial Secretary's 2025 budget underscores this vision by positioning Hong Kong as a pivotal multinational supply chain management centre. By aligning our digital standards with global frontrunners, and Pamela identified those, the US, Europe, UK, Singapore, Australia, Hong Kong not only preserves its competitive edge, but also serves as a catalyst for our other regional trade partners, notably in ASEAN nations and even some of the more developed partners like Korea, which are still at an early stage of their embracing of digital technology. If we seize the opportunity to advance first, we can set a benchmark for them to follow, and further reinforcing Hong Kong's status as a regional powerhouse. Secondly, we heard about the importance of data. Bertrand particularly picked up on that subject, and when you think of it in terms of Web 3.0 and emerging technologies, blockchain, artificial intelligence and the Internet of Things, reshaping global trade, our legal frameworks must evolve swiftly. Successful pilot projects, including the blockchain-enabled electronic bills of lading under the Hong Kong Monetary Authority's initiative with HSBC, illustrate not only the substantial potential of these innovations, but also the regulatory and banking sector's commitment to reshaping Hong Kong as a Web 3.0 hub. Yet existing legislation requires modernisation to fully harness these developments, and MLETR provides the requisite legal certainty for secure cross-border transactions. During this transition, we can expect increased complexity in trade disputes, underscoring the importance of robust dispute resolution mechanisms from arbitration and mediation to the recent hot topic of online dispute resolution. And you can gather from those remarks that that's dear to my heart as a dispute resolution lawyer of many years. By leveraging Hong Kong's unique role as a common law jurisdiction closely connected to mainland China, we see real opportunities to reinforce our position as a leading dispute resolution hub within the GBA and Asia. And lastly, ladies and gentlemen, the move to electronic trade documentation under MLETR holds significant promise for Hong Kong's maritime sector. And we've heard the thoughts of Bertrand, and we heard the thoughts of Victor about the importance of both. As highlighted in recent Law Society discussions and government consultations, the adoption of electronic bills of lading and related digital processes can substantially enhance efficiency, reduce costs, and provide greater legal certainty in maritime trade. The implementation of MLETR would provide greater legal certainty. It will provide assistance to consolidating Hong Kong's long-standing position as an international maritime centre, complementing its established strengths in finance, logistics and dispute resolution. So in conclusion, ladies and gentlemen, Hong Kong's timely embrace of MLETR driven digitalization can simultaneously strengthen our role as a global trade hub, accelerate innovation through emerging technologies, and reinforce our standing as a maritime and dispute resolution powerhouse. As we navigate this digital shift, continued collaboration amongst government, industry, and professional parties will be critical to ensuring Hong Kong remains at the very forefront of global trade transformation. So ladies and gentlemen, I wish everybody a very good afternoon, and again, a note of thanks to our wonderful panel.